Hi there, you tune in to BNSN Weekend, the one-stop shop for all your stock-related queries. I'm Megha Chadha.
Hi everyone, I'm Avan Dabash. Well, not just that, we also brace you for the next week with some top recommendations. Let's bring on board our two experts who will be guiding us over the next half hour. On the fundamental side, Gaurang Shah, Assistant Vice President, Geojit BNP Paribas Financial Services, joins in. And to map the technicals, we have with us Deepak Mahoney of TrendWatchIndia.com. Well, let's get the ball rolling and start off with our first query for the day. This one comes in the banking space on an Axis Bank, and Somati Bhattacharya has sent in this query via email from Kolkata. Now, he's bought Axis Bank futures at a price of 1,250 and wants to know the upside targets that he can achieve. So, Gaurang, what do you make of it? Do you think he should hold on?
Well, Avan, firstly a disclosure, we do have positive coverage on Axis Bank with a target of about 1385, and if I'm not mistaken, the stock of Axis Bank is, I think, about 1300 if I'm not mistaken. So what he's looking for as a target, 1300 is achieved. If the correction seeps in, I don't think it's going to be limited only to Axis Bank. I think it will be across the board, the way the markets have rallied this week, especially over the last 3 trading sessions. And of course, with that market correction might be a little bit smaller. So if he's already in profit, he's bought it at 1250. And if the spot price is about 1300, then the premium might be attached to the December futures for Axis Bank. So it's prudent to keep a trailing stop loss over here, and as the stock prices go up till the time it corrects, you should go on increasing your trading profitable stop losses so that you can maximize out of the position that you have in the FNO segment.
Okay, so fundamentally we've got an Axis Bank that's looking pretty strong, but Deepak, on the charts, what are the prospects? What further upside would you envisage?
Well, it's very likely because the market is in the midst of a strong rally. But what we've got here is that Axis Bank has already run up for 4 sessions in a row. So a correction is kind of due. The best strategy for him right now would not to go, use the target by all means, but keep a trailing stop. The trailing stop will help him get out at a higher price in case the stock reverses a little earlier than expected. And such a reversal should be now sort of expected. You can't say when, but it could happen before the target, and therefore the trailing stop.
The second query for the day then, this one comes in from Bangalore, and Uday Kulkarni, an IT professional, is here with us.
I have invested in Mahindra & Mahindra. Again, I would like to have an expert view whether to hold this stock or to sell this stock, and I'm ready to hold it for 3 to 5 years.
Okay, so let's talk about the fundamentals of an M&M and find out what he should do. Remember, there has, Gaurang, been the recent news. M&M will be shelling out nearly $282 million for the 50% stake in Aston Martin and an additional $480 million in debt. Do you think that given its cash reserves at the moment, this is a step in the right direction, and what do you think he should do?
Well, we saw M&M acquire SsangYong, and they have already launched 2 or 3 vehicles from that particular brand name. And given the kind of presence that M&M has in the domestic market across all verticals, I believe that there is no stopping for this particular stock. It has been one of the outperformers in the 4-wheeler stroke LCV segment. Our belief is that yes, if you have patience with the stock, it could touch targets about 1065. There might be a little bit of concern with this acquisition that you rightly spoke about of Aston Martin. And we already saw when the news came out, the stock corrected a little bit, but then again bounced back smartly to close to about 930, 940 levels as we speak. Barring those bad days or a knee-jerk reaction, we don't see any huge overhang on the stock. And I believe that it's not going to be difficult to reach that figure of 1065 or so. And what we also believe is that the month-on-month numbers for M&M has been quite above the expectation, and the results also on the quarterly front have been by and large again above what the street was expecting. So we don't see any difficulty, barring 1 or 2 odd days of profit booking. I think the stock is well placed to move much more higher.
Okay, so there's further upside definitely on the cards for a Mahindra & Mahindra. But if we talk technicals, then Deepak, this one's a stock that's outperformed the auto index. It's trading above all those key moving averages as well. How much more upside can an investor expect from these auto names and an M&M?
Well, M&M and Maruti have been the best performing auto stocks, if you don't count an Eicher Motors, in the last 4 or 5 months. So certainly a hold. And anyway, he's thinking of holding it for several years as a long-term investment. And I think that's a pretty good idea because it's not just the current momentum, but the stock has the ability to hold out reasonably well in bad market conditions, and that's really good for a portfolio stock. Your gains don't just disappear when there is a bearish situation. So given that, I think his decision to hold it for a long term is excellent. He should just hang on to it.
So it's a thumbs up coming in from the fundamental as well as the technical side. You can look to hold on to an M&M with strong upside targets. Well, the final query for the day comes in the pharmaceutical space on Cipla, once again sent in by Uday Kulkarni. Let's listen in.
I have another stock which is Cipla, and I would like to know expert view on whether to hold this stock or sell this stock, and I am ready to hold this for 3 to 5 years.
Well, pharma is of course another basket, Gaurang, that has seen a stellar run in this week, and Cipla as well is no different. It's trading close to all-time highs. It's above all those daily moving averages, and recently we also had a CLSA that continued to maintain that outperform rating, but they are looking now at a target of 445 rupees from the longer term. Do you think, what do you make of the fundamentals of the company, and especially in light of the fact that of course one of its South African arm has got that new order from South Africa?
Well, over here also, firstly a disclosure, we do have positive coverage, and we came out with this coverage at close to about 323.40 odd levels on Cipla, and the numbers were excellent. I think over the last many years, whether you see it quarter on quarter or year on year, we have seen significant amount of improvement in the earnings visibility for Cipla. Other than that, of course, there have been positive announcements, like you rightly mentioned, in South Africa, one of its arm have got an order, and our belief is that going forward, this outperformance, and it's noticeable to see over here, and when you see stocks like Ranbaxy and Dr. Reddy's, which are frontline pharma companies, they have actually not performed well and have been range bound. But whereas you see names like Cipla or Glenmark, I think they have been making new 52-week highs, and they are able to sustain at those levels, and you see renewed buying interest coming in. So our target is also where the earlier target, as you rightly mentioned, is 445. So hold on to it. I will really not be surprised to see some of these mid-cap pharma names going forward and becoming a large-cap stock.
Okay, so those are some aggressive targets coming in there on a Cipla, and over the last 1 week also, the counter has shown you good outperformance, a good 6% higher. Well, so Deepak, we've spoken about the fundamentals, which really seem to be intact. Most of the brokerages are extremely gung-ho on this sector as a whole. But do you think the technicals are mirroring the fundamentals and that he should hold on?
Well, it's closed at a new high today that more or less sums it up. But I should further add that this is a good pharma defensive stock also to hold. Sun Pharma, Cipla, these two are good defensives. They have held out in past bear markets exceedingly well, whereas you look at a Strides, Arcolab, Glenmark, these can cost you 40-50% in declines very easily. So given that this too, like Mahindra, is an excellent portfolio stock, farmers don't usually have that sort of momentum which the more volatile interest rate related sectors can have. So it's not really going up at the same pace as a Mahindra. This is only up, if you want to call that, only 30% in the last 4 or 5 months. But still, I think an essential part of the portfolio is the pharma stock, and this is a good one for that.
Okay, so Cipla certainly is a good stock to be in, a good defensive mid-cap play. That's what both Deepak as well as Gaurang believe.